Hello and good day. This is the daily analysis of the GBPUSD pair for February 9th. On the last trading day, after liquidity was collected, the price, on the sell side, it reacted to the daily unicorn zone and ultimately closed with a bullish bias. If on Monday the price manages to close above the level, 1.36323, it could be accompanied by positive momentum and continue its trend up to the 1.3694 level. However, if it only collects liquidity on the buy side and closes within Friday's daily candle, it could enter a bearish phase using the manipulation leg movement. We can examine the price movement target in case it turns bearish, and we see that the 2 to 2.5 range is at the levels of 1.3458 to around 1.343. This is a CP zone, and the price could move toward this area. Also, considering fundamental factors, the weakening of the pound, and central bank decisions, which it will likely have a pullback, but the price could move downward. But by analyzing the 4-hour time frame of the GBPUSD pair, we can see the price movement which, as predicted, entered a bullish phase after a liquidity sweep. And finally, after reacting to the fair value gap area, as predicted, it continued its downward trend and is targeting lower prices. Currently, after collecting liquidity on the buy side, if the price manages to close above the area, it can move up to the CP area at the 136.42 level, and after that, enter a bearish phase, until it finally enters the FVG area at the 135.50 level. But if it closes above the CP area, the price can continue up to the fair value gap area at the 1.3681 level and continue its bullish trend. By analyzing the Fibonacci ratio from the origin of the bullish move, we can see a price reaction area that is located in the OTE section and extends up to the 61% level. The price has completed its Fibonacci retracement, and by analyzing the retracement leg, our OTE area and the 50% level are also confirmed. In this area, there is a gap with significant value, and the price can move up to this area at the 1.3688 level. And after that, it may continue its decline and target lower prices, which is currently being anticipated. The price may have a short-term downward correction and retrace to the OTE area and the 61% Fibonacci level, which is a fair value gap area. From this section, if it only collects the liquidity and gives a consolidation close in that area, the price can move to this area and the 50% unicorn level or the order block area up to the 1.35 level. It can move towards the order block area we have, and after that, in this section, we can look for a trading strategy to enter a buy position. We place the stop loss behind the order block area, aiming for the fair value gap target at the level of 1.3697. But we must definitely consider the bearish market context, which overall, with the weakening of GBP against USD, the price is in a bearish phase. And it's better to only enter trades that are in a sell position. By reviewing the DXY index, we can see the price movement entering a fair value gap area. And in this area, a price channel has formed, which after the channel was broken, a pullback occurred smoothly. And after that, it is currently moving downward, which is expected to continue. With the decline of the DXY index, the levels of 96.991 or the 96.303 area could trigger a move in GBP USD to the upside, and in these situations, we can look for sell positions with the swing low target in the market by analyzing the time frame of 1 hour for the GBPUSD symbol. We can see the price movement is in a consolidation range, and after a stop hunt, a candlestick is forming. It's a pin bar, which could be a trading opportunity for a sell position. with the target being the FBG zones, where we can use projection to analyze the price movement target. This is the 2 to 2.5 range at the levels of 1.3556 to around 1.3544, which is located at the fair value gap node. This could be the main price movement target, and after that, weaken in this area. Also look for a trading strategy for a buy position targeting the market swing highs. Additionally, as an extra confirmation, we see the price reacting to the 100-period moving average. Here, it reacted to it and failed to close above the moving average. And also, with the RSI indicator, we see a negative divergence, where the price has formed higher highs, but on the RSI indicator, lower highs have been formed. By analyzing the 15-minute time frame of the GBPUSD pair, we can see that the price movement during the Asian session was an accumulation move. If, during the London session, there is a manipulation move, then the New York session could follow with a bullish distribution move. So, after a downward move and collecting liquidity on the sell side, the New York session could enter the bullish distribution phase. Becomes possible. Wishing you success and profits!